This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of Monday, June 28th, 2021. Again, a daily podcast is all but just a small part of what you receive as a member at TFMR. Again, it's only $15 a month, 50 cents a day for me to be your eyes and ears at this critical time. You get a post every morning summarizing the news of the day, and then a podcast every afternoon with charts and updates and information you can't get anywhere else. So please join us at tfmetalsreport.com. We actually have a coupon code going right now that I put on the Chris Marcus show earlier this week. So if you sign up between now and the end of this weekend and pick a monthly subscription, again, just $15 a month, at checkout, you enter the coupon code of the word silver, you'll get 50% off that first month. It'll save you a whopping $7.50, but allows you to kick the tires and see for yourself just how valuable TF Metals Report is. Again, sign up at TFMR, enter the coupon code SILVER after selecting a monthly subscription, and you'll get half off your first month. So what were we talking about this week? Again, the metals have been really having difficulty sustaining a bid, and it's mainly due to a rising U.S. dollar index. That was the main focus of our attention really all week long, but that was something we were talking about back on Monday. Because, again, the dollar was around 90, and then it went to 92.50, and that was all it took to crush us. And now in the time since, it's come back down, bouncing as we've been noticing off of the 200-day. As long as it stays above there, we're going to take a run. We got that risk of running all the way up, at least to this trend line, okay? Which goes all the way back to last September, okay, in this little pennant that we have here. Now, there's some hope. There's still some hope that we could fall later this week, maybe on the jobs report, get back under the 200-day, run some of these recent longs back out, maybe reinstall some confidence in the shorts and get us back down to 91, and that would certainly help. But for now, as you can see on the 30-minute candlestick chart of the last 10 days, the dollar's not really doing anything. Big spike on the 16th, follow through on the 17th and the 18th. But in the time since, well, it's down 50 cents, but really just kind of going sideways. On Tuesday, a lot of the talk was about inflation and this nonsense of transitory inflation that the Fed is using to try to overtly install some yield curve control to keep long rates from rising. Well, one of the ways you can measure inflation and inflation expectations is through the TIP, which is an ETF which holds Treasury inflation-protected securities. Now, the interesting thing about those is the Fed is now about the largest holder of them. They bought so many billions of them through their quantitative easing program, which gives them control of that market. If they want to start dumping tips, they can create the impression that inflation expectations are falling, not rising. So we watched the chart of the tip very closely, and that was something we discussed on Tuesday, June 29th. First, the tip, I mentioned it earlier, up again today, pushing toward 128. Notice the big red candle, that was from FOMC day, coming up 2 weeks ago tomorrow. We were pushing right before that. See how the wick on that candle's all the way up there near all-time highs? We were pushing to move to a new all-time high, which, again, we spoke about that day. Fed is trying to convince you it's transitory. New highs in the tip, not transitory. Fed, big holder of tips. So Fed, in conjunction with all this, dumps tips and drives the price down from above 128 to almost 126.5. Huge move. Do you see any other big red candles like that on this chart? But look what's happened since. Not transitory. And now moving all the way back up. Now, of course, we're still subject to the Fed dumping it to create that illusion, just like we're subject to the banks dumping gold. But this is, again, another sign, just like that savings rate thing, not transitory. Wednesday was the last day of the month, the last day of June for 2021, June 30th. So at the end of the month, we got to take a look at the monthly charts. The monthly chart of COMEX Digital Silver sure is interesting. And that was just one of the charts we reviewed on Wednesday. And now look at the silver chart. And now you'll see why I have the 50-month and the 200-month. Because again, silver, the 50-month, also crossed the 200-month back in 2005. And look what happened. It took off from 6 to 18, came back, found support at that 50 month, and then went to 50. And now look what happened. Back at the beginning of 2019, the 50 month broke down below the 200 month. And you thought, oh boy, this is really bad. No, it's not. And right now, as of this moment, and actually it's going to get better probably next month, the 50 month is once again crossing the 200 month. We're talking long-term hocus pocus here. But again, notice how narrow they were together in 2002, 3, 4, and 5. And then once it crossed, things really started cooking over the next few years. Price tripled. And now here we are about to cross again. In a traditional sense, again, I keep talking about 26 and 28. Why? Well, look at 26 and 28 from the period 2011 through 2012. And now here we are again. 26 is either offering support or resistance, and 28 is clearly resistance. We're rallying, though, clear trend line out of late last year. It's a matter of time. Chart would suggest eventually, right, 36, 44, 50. But again, the last time these lines crossed this way in 2005, we tripled in 3 years. So could we be talking 90? 3 years from now? There's people out there that have those forecasts. Thought I would just leave that with you. There are a number of things to discuss on Thursday, June the 1st, as the new month, the new quarter began. We also use that as a good time to check in on the daily charts of gold and silver, particularly with the first Friday of the month looming, and you know what that means, the monthly jobs report. So speaking of the metals, here we are, just kind of going sideways. Now we spent 2 weeks mainly in about a $10 or $20 range, right around this level. Tried to get higher today, like I said, got to 1783 and fell back. At least we've been bouncing above 1760. If anything, I wouldn't want to see us close below 1760 if they smash us tomorrow. But if we can close above 1780 or even 1790, that'd look pretty good. Again, still deeply oversold RSI of 36. Silver the same way. You can see I just drew one line on here. Takes you all the way back to February. You can see we're through the month of February, 2650 was clearly support. And then in early March, it became resistance all the way through March into April. And then once it got above there, it became support for 3 days in early May before it went to 29. And then after the big 2-day plunge last week, imagine that, resistance at 2650. So we can get above there. That sets us up for 27 and that 50-day, which is up there. The only good news is it has been holding now for 2 weeks its 200-day moving average. So hopefully it will continue to do so. And on Friday, July the 2nd, well, it's the first Friday of the month. That means we got a BLSBS, our TF Metals report. Nickname for the monthly jobs report. It's BS. It comes from the Bureau of Labor Statistics. And so it is the BLSBS, showing big-time job growth, but most of it coming from the service sector and from teachers, half of that coming from the retention of teachers through the summer as we come out of COVID. Okay, well, I guess the market saw through that as the bond market rallied another 5 basis points to the lowest daily close that we've seen in months, and the dollar sold off too. This helped, at least for a little bit, a bit in gold, but also a bit in COMEX digital silver, which is fighting the 2650 level. As we move toward the COMEX close, if we can get above that level and stay there, and it looks like we will, that'll be our highest close in over 2 weeks. And actually, with some dollar weakness next week, and we might look for that because the dollar is so overbought, silver looks poised to run to 27, maybe even 27 and a quarter. But that's a topic for next week. But we're going to right now wrap up this week. We got a 3-day holiday weekend ahead here in the U.S. So for all my U.S. listeners, happy Independence Day. And to everybody else, we look forward to a holiday-shortened week next week. And we'll see if the precious metals can continue to recover from that thrashing they took after the FOMC meeting. The FOMC minutes from that meeting will come out Wednesday of next week, so you want to be paying attention then. Thanks again for listening, everyone, and have a great weekend.